Hello and welcome to Ask You for a Trend. I'm Josh Lipton. For the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. AI is still alive and well on Wall Street, but the landscape keeps changing as various players enter the AI arena. For more on what you need to know about the biggest names in the game, let's get to Yahoo Finance's tech editor, and that would be Dan Howley. Dan.
That's right, Josh. We're just going to break down some of the bigger names. So to start things off, obviously the 800-pound gorilla, that's OpenAI, and we're going to put Microsoft in there together with them since they have teamed up. Obviously, it's been a very lucrative relationship between the two. OpenAI has ChatGPT, kind of kicked off the entire generative AI explosion. Microsoft has been using that technology in its Copilot and its Azure platform. But more recently, the two are at loggerheads. They can't come to an agreement over how OpenAI should restructure its own business, and so that is leading to some reports that Microsoft may be, trying to work on its own generative AI offerings, while OpenAI may be trying to work on its own productivity suites. But after OpenAI and Microsoft, there's obviously Google. We have their Gemini service. It's similar to what you would get out of a ChatGPT. They offer document creation. You can upload files. You can create images, things along those lines. But it also has the power of Google behind it. You might have probably used Gemini if you've used basically any Google product at this point, because it's across the entire company's ecosystem, whether that's through YouTube, Mail, Docs, even your regular Google search when you see AI overviews, that's powered by Gemini. And then after that, we have obviously Meta. Mark Zuckerberg is trying to reconfigure the company once again after the metaverse fiasco that didn't really go anywhere except for give us some weird looking legless avatars. Now he's going all in on AI, and they seem to be doing relatively well here. They obviously have Meta AI. It's available through Facebook, Instagram, and WhatsApp. The problem, though, is their most recent model, called Llama 4 Behemoth, seems to be delayed, and there's no end in sight for when that delay will end. And so now Meta is going out and scooping up talent from other AI companies, whether that's the CEO of Scale AI, Alexander Wang. We also had Nat Freeman, the former GitHub CEO, and Safe Superintelligence, their CEO, Daniel Gross. They've all been packed up. Sam Altman at OpenAI had said Meta is trying to offer some of his employees $100 million to sign on. So I said that on a podcast with his brother, so we can't really know if that's for certain. After that, obviously, there's some others. There's XAI. That's from Elon Musk. He offers Grok through that. That is their chatbot. You can get it through X. You can use it on the website or through an app. Big thing about Grok is it's able to pull data not only from the web, but also from X, so it can get live data through there. Then we have others. We have Perplexity. That is basically a search engine built with generative AI in mind. Probably the best example of a competitor to what Google has to offer. It also has a lot of sourcing available, so it'll show you the sources of from each of those results that you search for. Obviously, you can also generate images if you want to do that, things along those lines. And then finally, we have Anthropic. That's gotten a lot of funding through Google and Amazon. It's available through a number of services, and they as well offer a kind of web browser experience where you can search, you can create different documents, and things along those lines. But really, those are the major players that you have to be watching out for. There's a few others. Obviously, we have Thinking Machines from OpenAI alumni. We also have a few others like Mistral out of France. But these 7 here are really the biggest players at the moment.
All right. Thank you, Dan. Well, we're seeing big moves in big tech, with Nvidia hitting another record close today. For more, I want to bring in now Dave Mazza, Chief Executive Officer at Roundhill Investments. Dave, it's great to see you. Let's start there with Nvidia, Dave. It's a name you know well. What do you make of the move off the April low we have seen there, Dave, and what do you see ahead for Jensen Huang's company?
Yeah, look, Nvidia has shown its leadership through this market rally. And one of the reasons being is there's a lot of resiliency with the AI trade. I think obviously the DeepSeek news, which happened before the Liberation Day sell-off, brought a lot of skittishness to investors on sort of the durability of that trade, and actually more so the durability for companies like Nvidia to continue to power through that. But what we've seen is Nvidia's actually navigated well this environment. Certainly questions about the China market share that they're likely going to continue to lose. But now with the introduction of sovereign AI deals, I think Nvidia is showing that they have a lot more going for it than just sort of relying on what they've been doing with data centers and the hyperscalers in the US, and even a country as important or a market as important to it as like China.
I also, Dave, I want to talk about this new ETF of yours, which includes Nvidia, and the focus, it's humanoid robots, Dave. And listen, robots, we know, it's not a new investing theme. It's been around for some time. So why launch this product now, Dave?
Yeah, so it's interesting. Nvidia is actually the second largest holding in the portfolio. Not that they're making robots, but actually their Jetson AI is incredibly important for the growth of humanoid robotics. But to answer your point specifically on the why now, is that we're seeing a convergence of trends that are really, we believe, going to benefit robots, but particularly humanoid robotics. And one, it's this ongoing labor shortage, particularly for what are called the 3Ds of work. So that's dull work, that's dirty work, and dangerous work. So this is work. Dull work is repetitive work, stocking shelves. We know that a humanoid robot can do work of that nature. Of course, dangerous work, having a robot do that as opposed to a human can be beneficial. And then dirty work, cleaning sludge and things of that nature. And so because of the power of AI, the computational capabilities, plus the cost of those capabilities coming down, now is really the time that we're seeing sort of the potential for explosion of humanoid robots. And also this idea of embedded intelligence, embedded AI is coming, and it's happening now with humanoid robotics. So we really think this is the next wave of AI growth.
Now, some of the names in this ETF, Dave, folks are going to obviously recognize. They're going to see Nvidia, they're going to see Tesla. Some other names, though, they may not be as familiar with. Walk us through some of those.
Yeah, no, so it's interesting. So the humanoid robotics market is actually truly global. So if you look at this portfolio, we certainly have exposure to US companies, but there's Chinese companies in the portfolio, Japanese companies, Korean companies, because actually in China, we all think about robots, and the first one that comes to mind is probably Optimus, right? And that's, we believe, has huge potential. It's already being piloted in the Fremont factory in Tesla. We expect to see sort of legions of those robots coming later this year into 2026. Tesla, of course, has a leg up, but there's companies like Dubot and others in the portfolio that actually have robots that are in market today. And these humanoid robots are actually intended to do different types of work, right? So it's either work in factories, some are focused more on household applications, healthcare applications, and then of course, Boston Dynamics. Everyone's seen the videos of Atlas for years and sort of what's occurred with that particular robot. But actually, Hyundai actually bought Boston Dynamics, so it's not as private as people think. And the idea of the humanoid robotics ETF, ticker HUMN, is to provide exposure to companies at the tip of that spear making those robots, or companies like Nvidia providing the infrastructure and parts and really intelligence to allow those robots to function as they're intended to.
Final question, Dave. There are other ETFs, I think, that do track the space as well. So what makes your vehicle different?
Yeah, so there's certainly some other robotics ETFs, there's other AI ETFs, but really one of the differences here is that because this theme is so nascent, which we will acknowledge, this ETF is actually actively managed. So because we view this theme that's going to be very dynamic, we use active management to identify those companies, size them appropriately, and also introduce new entrants. There's going to be new companies coming to market, whether they IPO or other mechanisms that you can't necessarily get with a passive index. And the other thing I would say that we do, or intending to do with the humanoid robotics ETF, is to provide precise exposure. So there's actually only around 30 holdings in the portfolio today. So if someone were to look at it, you're not going to get a lot of filler in the portfolio. We're going to give you weights of companies involved with humanoid robotics, but do so with a lot of conviction.
Dave, great to have you on the show today. Thanks as always for your time. Appreciate it.
Thank you.
Stick around. Much more Ask for a Trend. That's still to come. U.S. stocks climbing with the S&P 500 and the NASDAQ closing just points away from those record highs. And Yahoo Finance's Alex now joins us now with the trading day takeaways. Allie.
Josh, we were so close.
Right
We were
there.
cheering in the newsroom. We said it's gonna happen, and we just missed those records there. So all eyes were on the records. We got some, we didn't get others. The biggies we didn't get, like you were just saying, just points for the S&P 500. 3 points. The number that we were watching was 6144, 6141. Same with the NASDAQ composite. We were not too far off of those record highs either. And then we did see the Dow Jones Industrial Average close in the green there, up about 0.9%. So we could take some solace in the fact that there's green across the screen. And if we look at the NASDAQ 100, another record there. We saw a record on Tuesday, so that just continues to build onto those gains. Even the equal weight NASDAQ 100 continues to trend upward. And looking under the hood of the NASDAQ, you did have some positive momentum for certain stocks like Nvidia. We saw that record yesterday, have another record today. And if you take a look from the April 8th bottom there, you can just see this move upwards to the top, nearly 50%. And across tech, if we look from that April 8th bottom, you'll really see that there's a lot of momentum for many of these names here. Broadcom, even Tesla, Amazon. The only big one in my view that's in the red here is Apple, struggling a little bit. And that has a lot to do with some more uncertainties on the tariff front, along with some disappointments around its AI launch. But the fact that we're continuing to see this momentum chasing is an encouraging sign to the Wall Street bulls. And even from a sector perspective, since those April bottoms, you see tech again leading, but also communication services, industrials, consumer discretionary, financials. This really seems to be a broad-based rally here.
Yeah, I was talking to Schaefer in the newsroom talking about this, that momentum trade, you know, how much of a theme and a trend that's been, just investors deciding, listen, they're going to buy their winners because they just anticipate them to stay winners, you know. And you mentioned, you know, we saw Nvidia today, that AI boom. I mean, there was a question about that, whether that would continue, Allie, but then we heard from those big tech names, they were going to keep spending. The sovereigns are spending, and that's worked as well.
Yeah, and I've been speaking to strategists all week about the tech boom and whether it continues to have legs, and they tell me that it does, that there's a lot of cash on the sidelines, and really these companies with their big balance sheets, they allow investors to be insulated from a lot of these risks, and that really seems to be key here. Investors are just looking past some of these noisier headlines. And then another big headline we got today was who will be the next Fed chair. Now, this is based on reporting for both Yahoo Finance and the Wall Street Journal. This is your list here on who Trump is considering. He wants to name someone as early as September, so Fed Chair Jerome Powell will continue to be in that position at this time, so perhaps a shadow Fed situation. Scott Bessent, Treasury Secretary, is reportedly in the running. Kevin Hassett, Chris Waller, that's who the Journal reported, but our own Jennifer Schomburger said that Trump is no longer considering him since he voted in the last Fed meeting to keep rates on hold, and we know that the president wants a very dovish Fed chairman at this point. He wants those rate cuts. We've seen him go against Powell. Whether or not he'll get that this summer, that's a big TBD.
Yeah, I mean, we know Trump wants them cutting. He wants them cutting right now. He's a real estate developer, Allie. Of course he wants them cutting. It is interesting about Waller because, you know, Waller, Bowman, we just heard from them. They were kind of suggesting, hey, cut could come next month.
And you wonder if they were maybe jockeying for that position, but there's still a lot of unknowns at this point. And when we talk about, you know, a rate cut potentially in July here, markets are certainly still pricing in a September rate cut. You see those odds at 70%. However, when you look at July, it's doubled compared to a week ago. So there might be a bit more conviction that maybe we could see something this summer. We do have PCE inflation data out on Friday. If that continues to trend downward, and if perhaps next week for that jobs report, we see, you know, the unemployment rate escalate, we see other labor market cracks, maybe that convinces the Fed to cut. I just think it's a little too early at this point, and Jerome Powell's been very good at telegraphing what he thinks will come next. There's not always a ton of surprises, not to say that we couldn't see a surprise. I just would be a little weary to put money on a July cut at this point.
All right, we shall see.
Yeah.
Thank you, Allie. Appreciate it. Stick around. Much more Asking for a Trend still to come. Hollywood and Formula One have spent 2 years and hundreds of millions of dollars to create one of the most ambitious sports films ever produced, F1 the movie. comes out this weekend, and we've got Yahoo Finance's Pras Subramanian, as well as Joe Pompliano, host of the Yahoo Finance Sports Report, here with me to discuss what it has taken to get to this point and what this could mean for the racing industry as a whole. Joe, I will start with you, because on your Substack, Joe, I was reading, you talk about Hollywood and Formula One here teaming up, creating what you call, I want to get this right, Joe, you say it's the most ambitious sports film ever produced. Tell us about it, Joe. What makes this movie so special?
Well, it's really all about the details, Josh. I mean, as you said, they spent 2 years and hundreds of millions of dollars producing this thing. It comes from the people behind Top Gun Maverick, so obviously the production and the directing is going to be phenomenal. Brad Pitt is in it as well to bring some of that celebrity status. But the details are really what blew me away. I mean, they're not using prop cars or green screens. They worked with the Mercedes Formula One team to build a custom fleet of cars for this movie. The camera work is absolutely incredible and really innovative. And we're going to see what this actually does for Formula One. I mean, Formula One has been at the forefront of media for the last number of years with Drive to Survive on Netflix and now this. All they really had to do was give them access into the sport, and it could be a major global growth driver for them going forward.
Pras, I want to bring you in here as well. How big is Formula One in the U.S.? How fast is this growing?
You know, about 5-6 years ago, maybe a few thousand people watch these races, but now we're at, I think, 1 million per race according to ESPN. So it is a fast-growing sport. So kind of like what Joe mentioned about how the Netflix effect sort of built that audience up, got it going during the pandemic, and then here we are with this 3 races in the U.S. and this big movie. But, you know, one of the things that really impressed me about the film, I think, is what Joe mentioned, the embedding, how deeply involved the filmmakers were in real race cars. Each driver had multiple different suits. I had heard that when they were shooting at Daytona, they had a whole, a tent the size of like a circus tent with all kinds of sets and props. But I spoke to F1 team boss, Williams team boss, James Vowles, about how closely tied in the teams were with the filmmakers.
It's not a documentary, but it is authentic to us as a sport. Jerry, Joe, and the team were really, really impressive at integrating themselves across 23 and 24, such that, as far as I went, we had an 11th team alongside us.
Yeah, and it seems like the 11th team really was the I think it's the APGX team or something like that. That's that Brad Pitt actually drove for. How deeply involved they were. They were coming out with the actual race car drivers at real events. So it looked like it was all part of the same, not just a movie, but also almost like, he said it wasn't a documentary, but it was actually sort of like the sport as they know it.
Joe, think about F1. What, as just a league, as a business, Joe, do they get out of this?
Well, hopefully a lot of new viewers. I know that some early data that they've seen from test screenings has really shown them that this could be a really big growth driver for them. I think it was 18% of US viewers so far have never watched any Formula One races or been to a race. It was 50% in the UK, so a little bit higher, but still probably lower than most people would expect. And Eddie Q, the Apple executive, told ESPN that after the movie was over, they asked people, would you want to go to a race now? And nearly everyone raised their hand, right? So that's some kind of tangential data, but at the same time, it could be really valuable for Formula One going forward, because this movie is going to do phenomenally well in the box office, especially for a category that doesn't always do super well in the theaters. It should do really well, especially as it transitions to Apple TV. It's global, so it should do big numbers for Formula One and get people out to the racetrack.
What about the role of Brad Pitt here, Joe? Did I read he drove the cars?
Yeah, he was driving the cars. He actually trained for 3 or 4 months to prepare for this. Started with Formula 4 cars, went down to Formula 3 to really get the technique and everything down, and eventually went into Formula 2. Now, the cars that they're driving are not actual Formula 1 cars. They're Formula 2 cars, which essentially are just a little bit slower and a little bit less downforce, but still really fast, that they made look like Formula 1 cars. But this past week, he was actually able to go to COTA in Austin and drive a real McLaren Formula 1 car. So he's got plenty of experience, and it's obviously super impressive he was able to do that, whether it's a movie or not.
Well, listen, I'm excited. I'm ready to see this. You guys have convinced me. Joe, Pras, great to see you both, as always.
Thanks, Josh.
Time now for what to watch. Friday, June 27th. We're going to start off on the economy. We're going to be getting some fresh inflation data on Friday with personal consumption expenditures, or PCE. Economists forecasting that the Fed's preferred inflation gauge will hold steady at 0.1% on a month-over-month basis. On a year-over-year basis, both total and core PCE expected to tick up, respectively, to 2.3 and 2.6%, signaling inflation will remain sticky as the Fed charts the path forward with interest rates. Taking a look at the consumer, the final reading for consumer sentiment in June that's coming out on Friday. Economists anticipate anticipating no change from a prior reading of 60.5. That number would be about an 8-point bump compared to May, suggesting that U.S. consumers are feeling more optimistic about the economy. And shifting gears to entertainment, F1 the movie is releasing in theaters and IMAX in North America on Friday. The Brad Pitt-led film is the latest theatrical release for Apple Studios with a budget of more than $200 million. Well, that's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.